Hi everyone and welcome to today's morning report on Thursday the 29th of October with me, Rich Perry, market analyst at Handtech Markets. We've had this Fed meeting out overnight and it was a surprise, to a certain extent a surprise because they did sort of go a little bit more hawkish than the market had been anticipating, I think, and they removed the line from the statement. There was no rate hike, first of all, though, but they did remove some key lines from the statement. They removed the reference to the international issues, and that sort of removes or to a certain extent alleviates the fears that the market has over the Fed's concerns on China and also the volatility in the markets. And it was also talking explicitly about the next meeting at the potential for a rate hike. So that sort of squarely puts December right back on the table. And what has that done to markets? Well, first of all, dollar index sharply higher. Now this is dollar index over the past sort of 6, 8 months. And we've seen this big downtrend broken now. So the dollar index coming up towards perhaps the test of that August high again, but certainly a strong move to the upside, breaking that sequence of lower highs. Very interesting because you look at the 2-year, for example, sharply higher. Not yet, and find this interesting, not yet up at levels at which we saw certainly in September when the market was sort of really pushing towards a September rate hike. So the 2-year on the 2-year on the Treasury yield has a little bit further to go, I think, before it gets to that sort of level. Also, the 10-year is not massively pushed higher. Certainly not to the extent that the 2-year has. So the market is still potentially a little bit cautious. I mean, if you look at also the Fed funds futures rates, they're sort of pointing towards maybe 45% chance of a rate hike in December. So it's sort of really in the balance now as to what the market thinks on this December rate hike. So other issues. We had yesterday a sharp rally on the oil price. Big rally following on from those consistent declines that we've seen over the past sort of 2-3 weeks on oil. Didn't close below that support line, 43.20, and bang, had a massive update. Just starting to retrace that move a little bit, but very interesting rally that we saw yesterday. So we had a sharp move on the dollar, and also a little volatility on equity markets as well. The S&P 500, for example, actually was initially reacted lower, but then closed towards the highs of the day. So very strong turnaround. But that sort of momentum in the S&P 500 hasn't been reflected in Asian trading or even European trading today. Asian markets slightly mixed. Not really sure how to take this Fed news because obviously a stronger dollar has an impact on all those countries that have large amounts of dollar-denominated debt in Asia. Also in the European trading session as well, markets are sort of reacting fairly mixed and not really sure how to take this news. So very interesting movements on these markets that I will take you through some of them in a bit. But certainly the caution today is still fairly high. Now we've got the Aussie dollar as my chart of the day. Now the Aussie dollar started to correct yesterday. So it's not the Aussie dollar. We've got the Aussie dollar there. Aussie dollar started to correct yesterday and started to fall away, but that fall was accelerated by this sort of hawkish Fed meeting, and the drive lower initially came on the news of lower than expected Aussie inflation, and that's sort of pushing the market towards expectation of a potential rate cut by the RBA next week. Now we've had this breakdown below 72 figure on this chart of the Aussie, and that sort of completes this little top pattern which we've had in place. Now you could argue that sort of gives us a downside target of around about 70.20 to the downside. So if that momentum continues to the downside, and certainly looking at the momentum indicators on the technicals, look at the RSI. Every time, look at how important that 50 pivot level is on the RSI. 50 is a really important pivot for defining strength or weak momentum. So we're strongly back below 50 now, so that suggests weakening momentum. You've got a crossover sell signal on the MACD lines, you've got accelerating lower on the stochastics, so it certainly would suggest selling into strength on this Aussie, and that continues today to the downside. You're sort of 30 pips down on the Aussie at the moment. Now Sorry again, wrong chart. That's annoying. So this is the hourly chart on the Aussie. That's the breakdown of 72 figure. Consistent support that was acting as, and then bang, that's gone now. So 71.60 is your initial reaction high. That was just prior to the Fed, where the Aussie had initially sold off. It started to drift high, but then the Fed came out with that statement, hawkish statement, and bang, it was down to fall again. So the Aussie is under pressure. Momentum indicators negative on the RSI and MACD lines. Any sort of unwinding, I think, is a chance to sell on this Aussie now. You've got the interesting that already the initial resistance has come in around the initial support that we saw yesterday. Is that old floor of support has become new resistance overnight today into this morning. So that's interesting. So that comes in around about 71.20. So between 71.20, 71.60 is that reaction high, and then 72 big figure is the big resistance now. So a few levels for you to work with is in terms of unwinding selling opportunities, but certainly looks as though the Aussie is going to be now falling away, I think, in front of this RBA meeting next week. So Aussie under pressure. So I wish you good luck in your trading on the Aussie today, and I will speak to you later. Thank you.